Hi everyone, welcome back. Forex Market Analytics, Monday morning. We're opening up the trading week. We wanted to revisit the Aussie Swiss. As you know, we have a bullish position here for quite some time. And last time we were here, price was breaking below 69.25. That was the moment. And it actually, the following day, it actually came back and spiked it slightly from below, right? So that was an important event. We thought at that point that price is probably going to continue trading sideways, which means it's going to complete a full leg back to the downside, back to the lower section, probably going to take the previous low. So everything went down pretty much exactly how we expected it, right? Now we are looking to double down, right? Because price did take the previous low, and at this point, we have that range from the previous low, pretty much where we're trading right now, and all the way to 68.35. We're just talking about 20 pip, right? This is the range where we would like to pull the trigger again, right? Basically to double down before price turns around and begins to produce the next upside leg. In this case, it's going to be leg number 4. So since price still have some room to push downwards, right? We are reluctant to pull the trigger just right now. We want to wait probably a few hours, maybe a day or two, just to make sure that price is actually starting to turn around. Then, of course, we will increase the position. But here's the game plan, guys. Since we're trading sideways and now it's official, we're trading within that blue system here. So what we would like to do is actually use the upper section for partial execution, because there is a very good chance that we'll see another upside leg, but right after that we might have again another downside leg before turning around again with the 6th move, right? That's going to be the 6th leg, and then there's a very good chance that we'll see the breakout only with the 6th leg. So there might be some more up and down movements here. So we would like to take most of the position out at the higher section, leave just one trade in just to keep the position alive, and wait for price again, basically to replicate what we're about to do here on the next, on the next move back down, right? We will try to pick it up again, build that position, rebuild that position again, moving forward. So we're going to try basically to play out that trading range and kind of surf the inner waves before the actual breakout is coming. Now I want to show you the big picture, because that's very important. If you take a look at the weekly chart, you can see that ever since the middle of 2018, price had started to trade sideways in a very nice fashion, right? Because it had that 4 legs, where the second leg, take a look, the second leg was touching down here on the bottom support. Third leg went straight to the mid-high key level. Nice touchdown there. So we believe that setup is very much valid. And since price made it back to the lower section with the 4th leg, take a look at this. Beautiful reaction. Price is turning around. So it looks like we've missed the 5th leg, right? Back to the higher section all the way to 72.58. We're going to use that key level again as our primary price target. Now guys, I want to mention that we also have a secondary target here. That's the 69.95. We haven't reached that yet, that level. We were pretty close. We will reach that level eventually, as long as price, of course, will not break down below 68.35, right? 68.35 is definitely our last line of support, right? As long as price remains above 68.35, we think that it's much more likely that price will continue to trade sideways, and at some point will break out on the upside, of course. So we haven't touched our stop loss level. It's in its well, it's not the initial placement, but it is here for a long time, ever since price began to trade sideways. Still at 67.80. We want to keep it here and well below 68.35. As I mentioned, that is our main protection level at this point. So yeah, that's pretty much it. We'll see you in the next video.